All right, hi everyone. Mr. Eddie in my office here just asked me what's the difference between an employee and a contractor or a 1099 worker. So I'm gonna go do this real quick. Buckle your seat belts and I'm gonna go real fast here. So an employee is really, as you see here, the employee is gonna have taxes withheld from the paycheck. And they're going to get a W-2 at the end of the year. Everybody pretty much knows what a W-2 is at the end of the year. Your employer just gives you that actually after the year is over. Now, in a contractor, the employer is not going to take out taxes. There's no taxes being taken out. Eddie, no taxes being taken out. They're going to get what's called a 1099 at the end of the year. Now, with the 1099, the person puts the 1099 on his tax return, and it's like he has his own business. So when he does his tax return, it's going to look like he has his own business. A W-2, he's going to put on his tax return under the wages section, on their own personal 1040. So this guy here kind of operates as a business, this contractor. You're not taking out any taxes. This guy is an employee. Now the key thing, and this is very important, most employers try to, I would say most, but a lot of employers, they try to get by just making everybody 1099 so they would not have to pay any taxes on the employee, right? That's not necessarily the best thing to do. Because the way the IRS and the state jurisdictions determine whether you can make somebody a contractor or a employee is about control. So an employee, you tell the employee when to show up, when to leave, how to do the job. You give them resources like computers, anything you need. So the employer is actually providing this stuff, and there is an expectation that the employee is going to be loyal to the employer. Meaning that if I have an employee, then I don't expect you to compete against my business, right? It's a natural expectation that you don't compete against me, right? Now let's look at the contractor. The contractor has very little control. He's basically showing up when he wants. Now, whether he shows up or not when he wants is maybe that's not weighed that heavily. But the key thing is he does his job the way he sees fit to do his job. That's the key thing. The contractor basically dictates how that job is done. If I got to tell you when, where, how, what, then you're an employee. If I don't tell you how to do it and say, hey, you do it any way you want to do it, you do it anytime you want, as long as you meet that deadline or whatever, you sound more like a contractor. All right. So the big difference is the employer does not necessarily, he pays taxes here. Here, the employer does not pay taxes. So if you're trying to avoid paying taxes, this is what most people try to do right here. But a state government, especially unemployment, they will come back and say, did you have control over that employee? Because it could be certain things that happen. You can be randomly audited by, say, the state government, or the IRS can randomly audit you and do some type of employment audit. And they can determine whether someone really incorrectly labels someone as a contractor when they should have been an employee. All right. So here are some of the downfalls with labeling somebody the wrong label and handling it the wrong way. So if you're an employee audit, I've been in a few of these representing clients, or you're an employee, employee gets disgruntled and he says, hey, wait a minute, you were supposed to take out taxes for me, but you did not take out taxes for me. So they go to the unemployment, they go to the IRS and say, hey, look, the employer did not take taxes out on me. I owe a whole lot of money because he didn't pay taxes on it. He controlled the situation, right? The IRS or the state can come back and do an audit on that employer and then make that employer really liable for the payroll taxes, which could be big if you're talking about a lot of employees, could wipe you out actually. Or the unemployment could come back and say, hey, look, you owe unemployment for these people because you might have fired that individual. This one, it usually happens. You fired the individual, you weren't taking out the taxes, so the individual says, I'm going to get back at you then. I'm going to go to unemployment and say you were supposed to take out employment taxes and you did not. So the employment, you get an employment audit. The employment audit says, hey, look, you got to go back and pay all the unemployment taxes for from the day that you hired this person. Right? This could be deadly. This could be deadly because they not only will they look at that individual, they're going to look at everybody else in which you paid during that period. So this can be very, very deadly. Doesn't happen a lot, but it does happen. There are some very, very famous cases where large businesses had to go back and pay taxes. So how do you avoid this situation? All right, if you're going to hire an independent contractor, have the independent contractor submit an invoice to the employee. On the employer, sorry. Have the independent contractor submit an invoice, because guess what? Employees don't submit invoices. Guys, employees don't submit invoices, right? Independent businesses submit invoices. So if you really want to play this game, have your contractor submit an invoice. All right. Next thing, business cards. Have the contractor has his own business cards and represent his own business. And the key thing is you should have this contractor register somehow as a business, either a sole proprietorship, a business, S corp, LLC, whatever. Have him really set himself up as a business. He could be a sole proprietorship. But I'm just giving you these things just to protect yourself. You may not want to set up as a business, but to really protect yourself, you should really submit invoices to the employer. So if you want to play this game and really be a contractor. So that's it. Hope it helps. Catch you on the next video.